Welcome back to Radio Rothbard. I'm Ryan McMaken, executive editor at the Mises Institute. And with me today is Kristoffer Hansen. And he's a former fellow at the Mises Institute. He's written quite a number of columns for Mises.org and Mises Wire. He is an economist. And the reason I have him on today is because he recently wrote a column for us talking about a very specific issue related to the topic of closing down the central bank in Argentina. Now, we haven't covered Argentina and the Javier Milei situation in a lot of detail on Radio Rothbard. But I think in this specific case, a couple of important questions have been raised as to what would happen if you close down a central bank. And Milei has notably not done that, even though he said that's what he was going to do. And so just to give you a little bit of context here, to those of you who follow such things, you remember that a few years ago, Javier Milei was running for the presidency of Argentina. And he's attained a significant level of fame among libertarians for being a pretty free market guy in terms of his policies, and certainly by Argentinian standards, very free market, and has cut back government spending quite a bit. And part of his stated plan before he was president, however, was to shut down the central bank of Argentina, which is responsible for huge amounts of inflation down there, or at the very least to de-dollarize in Argentina. And this was a key part of his stated plan, was that we're not going to produce any more pesos in Argentina. We're going to switch to the dollar in a way that Panama and Ecuador have, perhaps. Those economies are dollarized in the sense that they don't use their own local currency except for very small denominations. They use the dollar primarily. And what this means is that their local central bank doesn't have much power in terms of creating and increasing its own money supply. So it really neuters, if you will, the local central bank in that country. So he was talking about doing something similar. And the idea here was that the central bank was going to be reined in significantly in Argentina, like big time, like in a radical way where the central bank became largely irrelevant and became unable, even for future administrations, to greatly inflate the money supply. Now, none of that has happened. And in fact, Milei doesn't really talk about it anymore, from what I've seen. Doesn't talk about dollarization, doesn't talk about closing down the central bank. And he has put forward some specific economic arguments in favor of his claims and why he can't shut down the central bank. And that's why I brought on Kristoffer, is because he's addressed, as an economist who understands this theory, he's addressed some of these specific questions, right? Can you shut down the central bank without a disaster, without hyperinflation? Because that's what Milei is saying. And so without really scooping myself or scooping Kristoffer anymore, let's go to you, Kristoffer, and really just talk about this in some more detail in terms of the economics behind it. Now, just to I think just get us rolling, can you provide us just with a general sense of what's been happening in Argentina in terms of price inflation, monetary inflation, and why is that happening? What is it about the central bank that is fueling so much inflation there? And then we can move on to issues of, okay, if we want to shut down the central bank, then should we, can we, what would happen? So why has there been so much inflation in Argentina, and is the central bank there at the center of it?
Yeah, okay. Well, first of all, thank you for having me. This is, of course, a very interesting question, very important question. So historically, Argentina has been a very inflationary country. So that means, of course, that Argentina's central bank has been very inflationary, has printed huge amount of money, mainly to finance the government. They had a brief respite of sorts in the 90s, where they actually did dollarize. That's to say, they established a fixed exchange rate, 1 peso to $1. That broke down then in 2002 because, despite this fixed exchange rate, the Argentinian central bank continued to print a huge amount of pesos. And they've really been doing that ever since. Of course, it's not like an exponentially increasing money supply. If that was the case, then the peso would long since have disappeared in a hyperinflation. So they have been very inflationary, and then from time to time a reformer comes along and tries to rein it in a bit, tries to backpedal a bit. And then just before Milei came onto the scene, won the election in Argentina, there was another bout of inflation with monthly inflation rates, price inflation rates, I should say, of 30-40% in this range. And that continued into Milei's first year as a president, before it finally returned to more moderate levels, moderate for Argentina, of something like 2-3% per month price inflation. I just checked the numbers, however, and the money supply is still growing at a very strong rate in Argentina. Just looking at M2 in Argentina, it doubled from December 2023 to December 2024. So clearly something must be done about the central bank, about monetary policy in Argentina, but it's not, well, as you said, it's not really clear what Milei wants to do. He has been talking about dollarization, and his supporters have been talking about it, but that hasn't happened yet. So, yeah.
So, and of course, I knew some Argentinians just here where I live in Colorado, people who have moved here from there, and they were very excited about Milei just because they and their relatives have had such a hard time maintaining a middle-class standard of living when price inflation is so out of control, when there's just so much in terms of government regulation, taxation, all of that. So it's been a true mess. So I can understand why people would support the idea. And where I don't think we're necessarily trying to make the case that anyone less than a perfect candidate is unacceptable. Obviously, Milei is an improvement over what has been going on in the past 20 years, just in terms of living your life as a normal person in Argentina. However, right, these presidents, they serve for a brief time, and there's always the chance that things will just go back to normal. So it does seem that something needs to be done in terms of really hobbling the central bank, or you're just right back where you left off again when things go back to previous political habits, which in the short term they are likely to do in this case, I think. So there's been some criticism, nonetheless, of Milei in terms of why isn't he doing some of these things to more heavily impact what the regime there is able to do. Now, what Milei has said in response to some of these criticisms of his showing less enthusiasm, he hasn't shown enough enthusiasm about closing down the central bank, basically, is the idea. And he has responded with an economic argument, saying that if he closes down the central bank, that would immediately cause hyperinflation. So, and this is what a lot of your article focuses on, is that claim, is that a sound economic claim? Because Milei wasn't just saying, pragmatically, I can't do it. He was actually making a claim about economic theory, saying, it's a bad idea to shut down central bank. So can you explain to us if that theory holds any water? Is that something we should put any stock in?
Yeah, I mean, I was also surprised that he made this argument. I could have understood if he said, well, I don't have the power to do this. I'm not a dictator. I'm somehow limited by the laws and so on. But that's not what he said. He said that if you close the central bank, the currency, the peso in this case, would lose all its value in a hyperinflation. Now, this is I guess I can't call it a fringe view, but I think it is a minority view, and certainly not an Austrian view of monetary theory. Basically, what Milei argues, or I should say the theory behind it, is that the money that a central bank issues is really a claim. It's a claim on the assets that the central bank owns, that are on the central bank balance sheet. And the value of the money is also backed by these assets. So the question of, well, how good or how bad is your monetary regime, how inflationary is it, is, on this view, it's not mainly to do with the rate of inflation, with the rate of increase in the money supply. It's to do with what kind of assets does the central bank then buy with its new money. And of course, in Argentina, the central bank has mainly, to a large extent, been buying government bonds of a not very, a not very fiscally conservative government. So these assets are, of course, of a very low quality. Even so, they do provide some backing on this theory. So if you destroy the central bank, if you close it, there's no backing, so there's no, there's nothing to support the value of the money. This is I think this is just fundamentally wrong. The value of money doesn't depend on any backing in a modern fiat money system. What determines the value of money is simply just the demand for it and the supply for it, of course, like with any other assets, any other economic good. And the demand for money, in turn, is determined by the purchasing power of money, or the expected purchasing power of money, if you want to be very precise. And this is completely independent of whatever might be in the central bank vaults or on its balance sheet or in its holdings of financial assets or whatever. It's as I think I wrote in the article, it's just a it's a wrong theory.
Well, you say then in your column that it's related to what we call the real bills doctrine. Now, as an editor at the Mises Institute, I have been trained, right, to keep an eye out for something that smells like the real bills doctrine, because we get a lot of columns from people writing about money and about gold and that sort of thing, and a lot of the times you'll get people who aren't necessarily in our regular orbit, people like you who are fellows and that sort of thing. We'll get people that we don't know as well, and they'll forward some theories about money and so on. So I have to be able to identify what we would just call money crank theories. And a lot of time it's real bills doctrine stuff. So anytime I hear the phrase real bills, or I see something that sounds like that theory, kind of my eyebrows go up and I start reading very carefully. So can you tell us a little bit about what this real bills doctrine is? Because it does keep coming up, and it's related a little bit. I kind of get hints of it in, say, like MMT theory and things like that. So can you tell us kind of how we would identify something that is this real bills doctrine?
Yeah, so certainly. So fundamentally, at its core, the real bills doctrine is more or less just the same as the old banking school of the 19th century. It asserts excuse me, that so it's a doctrine of how a bank can issue money, can issue fiduciary media without disrupting the economy, without causing some sort of disequilibrium or some sort of crisis. And it asserts that so long as a bank only issues fiduciary media by discounting real bills, then everything's fine. Then the bank is just adjusting the money supply to the demand for money. So just for the listeners, so a real bill, it means that it's a financial asset that's backed by or collateralized by real goods in process, or real goods close to the point of consumption. And the idea in the theory, what's the core historically, originally, is that, well, this is of course a real limit, right? I mean, there's only so many goods in existence. So you cannot endlessly increase the money supply, you cannot issue more fiduciary media than there are actually goods in process. the problem with this doctrine is that it's not the case. I mean, yeah, it's true that at any given point in time, there's only this exact quantity, this volume of real goods in existence. But the value of these goods is what you actually need to consider, the economic value, the monetary value of these goods. And this is obviously not independent of the money supply, of the rate of money inflation. It's not independent of the discount rate that the banks have. So if you are a businessman, whether you present your bill for discounting at a bank or not, obviously it depends on, well, what is the rate of discount? How much is in it for me? So the banks can reduce the rate of discount, and they can do this at will in a fractional reserve banking system. And if they do this, well, more bills will be presented, and therefore more money will be issued. So it's not really this strong limit on the money supply, and it simply it fundamentally misconceives that the role of money in the economy, that somehow you need to adjust the supply of money to the demand for money, or to the volume of trade, or to the needs of trade, or something like this. Like, I mean, there are very, very many variations of this doctrine historically, and well, as you said, nowadays you have a whiff of it, at least with the modern monetary theory. You have in Austrian circles, quasi-Austrian circles, one important Spanish economist is Juan Ramon Rayo, who is a supporter of the real bills doctrine, and who, well, I don't know if he has any influence on Milei, but he's at least a great supporter of Milei. So there's at least some sort of connection there. The banking theory that Milei presented is really just the inverse of this, right? If you say that there is this connection, this dependence of how much money can a bank or central bank issue and the amount of real bills in existence, well, then what kind of bills the bank has on its balance sheet, what kind of assets it has, must be somehow related to the fiduciary media it has issued. And you can sort of understand it from, if you just look at it in a very narrow bookkeeping or accounting kind of way. You would obviously say that, well, if this is just a company, if this is just an investment fund of some kind, you would say, well, a share in this investment fund is obviously dependent on the value of the assets in this investment fund. And that's true, right? But it just doesn't hold water for money, because no matter what kind of assets on the balance sheet, at most in a private bank, what you can actually redeem your money for, your claim on the bank for, is just an amount of base money, an amount of reserves at the central bank, or an amount of banknotes. And with a central bank, well, you cannot redeem it for anything, really. That's really just completely fictitious. But this should be some kind of claim.
Yeah, there seems to be just this need to identify the currency as being backed by something, right? There's a recognition that, okay, it's not backed by gold, it's not backed by silver, nobody claims it's backed by real estate or something like that, right? You can't redeem your dollars, pesos, whatever, for any of those sorts of physical things. So we hear often, right, in these articles that are submitted to me and so on, you'll sometimes hear the claim that, right, the dollar is actually backed by debt, by some sort of debt through the central bank, which strikes me as very similar to this sort of theory. But I just want to emphasize kind of what you mentioned a few minutes ago, which is, and correct me if I'm wrong, right, but the important thing about modern fiat money is that it's not, it truly isn't backed by anything, right? It's not backed by something on a spreadsheet. It's certainly not backed by gold or silver. but money is just a commodity or an asset unto itself. Is that correct? Right? It's just completely independent. It is a good unto itself, not connected to something owned by any bank.
Yeah, I mean, exactly. I mean, the only way you can say that money is a claim is if it's a case of money in a private bank account. Then it's a claim against the bank that you can cash in the form of physical paper currency.
But that's due to some sort of contractual relationship, right? You have with the bank directly between you and two private parties. Okay.
But you don't have any kind of claim on the central bank just because this paper note, whether it's a dollar or a euro, it is recorded on the central bank balance sheet as an obligation. But I mean, you cannot go to a central bank and say, well, please, I want to cash in my $10 note or my €10 note. You can say that, well, I know you have these assets listed. I want like $10 worth of the gold in Fort Knox, or $10 worth of treasury bonds, or whatever. There's simply no relation of this kind. It's of course correct to say that, purely from this bookkeeping fiction view, the pesos are an obligation recorded on the balance sheet of the Argentinian central bank. But this is simply it's partly a historical fact, partly an institutional fact, that historically, of course, you really could say that the peso or the dollar or whatever was backed by something, because historically you could go with your $10 note or your peso note or whatever to an office of a central bank and ask for $10 worth or 10 pesos worth of gold, because back then it was clearly a contractual claim on gold in the vault of a central bank. But that hasn't been the case, for more than 50 years now, that you could do this anywhere. And nobody, at least I don't think that nobody really expects that this is coming back anytime soon. So you also cannot claim that, well, I expect that next year I can go to the Argentinian central bank with my peso notes and I'll get a huge bunch of gold or of dollar notes or whatever. It's, as I said, it's just a fiction that's based in how it used to be back on the gold standard.
Oh, that's an interesting point too, right? Like nobody's hoarding dollars and pesos on a speculation that next year they'll be able to trade it in for gold and silver, right? That's just maybe somebody thinks that, but I can't imagine that is affecting the value of any paper money anywhere.
Yeah. No, I mean, I guess you could test this pretty quickly empirically. You could just look, the gold prices are going through the roof this last year, a couple of years. Then the value of a dollar should also be increasing should be doubling or something like this over this past year. That hasn't happened, so people don't expect the dollar to be backed by gold anytime soon, or the peso for that matter.
Well, having now then established that paper money is just paper money, right? It does not rely on the central bank doing something or owning something. So what would happen, right? Milei says if he closes the central bank, this will make hyperinflation occur and the value of the peso will immediately go to zero. What would happen if Milei closed down the central bank with the value of the peso?
So what would immediately happen if you said, we are closing the central bank, we're not going to print any more peso notes, we're not going to create any more peso reserves, is that the money supply would freeze. It would instantly freeze, no more addition to the money supply, or to the supply of base money, I should say. Of course, the private banks, insofar as they operate on fractional reserves, could perhaps still increase the money supply. But let's just stick to the central bank to begin with. Now, the key reason that price inflation rates in Argentina have been so high, the key reason that the peso has been losing so much value over the years is that they've been printing so many peso notes over the years that the money supply has been going through the roof. So once you stop that, you will immediately stabilize the value of the peso as a first step, right? I mean, if we have established that fiat money is not backed by anything, all that really determines the value of fiat money is the demand for it. The demand for it is based on purchasing power, expected purchasing power of a monetary unit, and the supply of it. And you can see that there's not going to be any new supply coming on the market, that this inflationary policy is over, at least for the time being. Then people are going to demand more pesos. That's to say that they're going to revise their expectations of the value of the peso, or they're going to have an increased confidence in the peso, or their inflationary expectations are going to go away. Economists describe it in all kinds of ways. But that's basically what's going to happen. So first we'll have a stable, like a completely frozen money supply. And as an immediate consequence of this, of course, I mean, it might take like a couple of days or a few weeks, but it will be very fast. People realize that the peso is not inflationary anymore. And they'll therefore stop getting rid of pesos as soon as they receive them. They'll even start accumulating them. Now, I have heard some arguments. Oscar Grau, writing for the Mises for Power and Market, I think, wrote that the peso is really a zombie currency only kept alive by the Argentinian government. And that might be the case. I mean, I assume that it's forced on the people by legal tender that you have to use pesos in daily transactions. But even so, just by taking this first step, you freeze the money supply, and what you do is you make peso a better quality money. And you therefore, even if it's forced on people will say, well, we can not only use it for the transactions where we are forced to use pesos, like paying our taxes, or whatever, buying real estate, any kind of economic transaction where you cannot hide it from the state. We'll also just generally start using it more, start saving more in it, and so on. So far from, I mean, this is really right. This is the complete reverse of Milei's hyperinflationary argument, that if you destroy the central bank, if you take the chainsaw to the central bank, as he's famous for saying, you're really going to convert the peso from a very bad inflationary, maybe even zombie currency into a very good currency. And it's it's very easy to do, assuming that you, of course, have the authority to do it, that he has the possibility of actually doing it. It's not, I mean, right, it would take, 5 minutes to write an order closing the bank and signing it. It's very, as I said, pretty easy.
Right. I mean, there are so many other things that could happen, right? We're talking about a all things being equal situation, right? You could change the legal context, right? You could say, well, you have to pay your taxes in some currency other than the peso, and obviously that would change the value of the peso. But we're talking about just simply closing the bank without changing other elements of the context. And you're right, if I'm going to have a money forced upon me that I have to hold because of government laws, I'd rather it be a currency that isn't going to lose its value at the rate of 5% a month in a bad month. So that would seem to be an obvious improvement in that case. And right, it's just like anything else. The supply stops increasing. Just say, for example, I mean, people say this about real estate all the time, right? You should buy land because they're not making it anymore. This is an old, I don't know if this proverb, quote unquote, exists in other languages, right? But this is a thing that you hear a lot. in America. That's not even economically true in the sense that they actually do improve land and make new usable land in a variety of ways. But you get the point, right? So if you stop making things, people recognize that its value would go up if that thing has any usable value whatsoever. And so without major changes to the context, it looks like the peso would continue to have usability in the Argentinian economy, and for the very least paying taxes, which everybody's forced to do. So they're not making it anymore. Value goes up. Seems like pretty basic sort of thing to me. Okay, so okay, so Milei, right? His whole argument seems to rest on this idea that you need the central bank to imbue money with value in some way. And of course, historically, we would say, right, lots of things have been traded and have been valued as money that have not had a central bank backing them up in any way. So it just historically doesn't strike me as a magnificent argument. But to finish out, let's address one other comment you made, and that was talking about the two different options really that Milei had set forward, which was one was closing the central bank, and the other was maybe closing the central bank or maybe leaving it open, but engaging in dollarization, which I suppose would allow dollars to compete with the peso in the Argentinian economy, regardless of whether you're making new pesos or not. But you say that closing the central bank was indeed a better option than dollarization. But now, of course, we're offered neither. We're not being offered either dollarization or closing the central bank, which is a bummer. But just tell us why closing the central bank would be better than dollarization, and what are some of the benefits of dollarization just while you're at it, right? I've noted that there are some political drawbacks to dollarization, such as the fact that it makes a country more at the mercy of American sanctions and foreign policy. But perhaps as an economist, there's some other costs and benefits in dollarization as well. So just give us a few bits of important information related to those two things.
Okay, so dollarization, of course, it just means that instead of using pesos, the Argentinians would switch to the dollar. So there wouldn't be any kind of independent monetary policy, independent monetary authority in Argentina. You would just be, well, as you said, at the mercy of American sanctions and foreign policy, but also really at the mercy of the American Federal Reserve. There's no question that if you just compare the state of monetary affairs as they have been in the recent past, and as they are right now, then dollarization is a better option because the dollar is not as inflationary as the peso. I mean, it's obviously still an inflationary system. It's still a fiat money system. It's just that the Federal Reserve is more restrained than the Argentinian Central Bank. Just like you could say historically that whatever the German Bundesbank was more restrained than the Italian bank. So as a European country, it was in Eastern European country, it was usual for some of them to go on the Deutschmark because this was just a better currency. And other South American countries have dollarized. Ecuador is a famous example, El Salvador, and I think a few others. So it's not, right, we need to keep this in perspective. It's not that dollarization is the end of the world, that this is going to bring a lot of irreversible ills with it. But you are still trapped in an inflationary fiat money system. And also, one argument that people who are in favor of dollarization make is that, you are forcing restraint on the government also, that they can no longer monetize their debts, they can no longer engage in their own monetary policy, that's to say their own inflationary money production. That's true, but only in the short term. I mean, there's a famous example of this, or an interesting example at least, that of Zimbabwe. You had hyperinflation in Zimbabwe in the early 2000s, and then Zimbabwe dollarized in 2009. And then they de-dollarized in 2019, as to say they reintroduced their own fiat currency. So this kind of security, of guarantee that people see in dollarization against new inflationary policies, I mean, it's there, but it's only for the short term. If the government really wants to have an inflationary policy, it's not that difficult to reverse a dollarization.
Well, in the case of Zimbabwe, that was kind of forced on them anyway because their domestic money was just completely destroyed.
Yeah. Yeah.
I mean, I don't know how much of a conscious choice. That was more of an admission of just reality, perhaps.
Yeah.
And so I guess so we shouldn't have been surprised that they de-dollarized after that. But you're right. Once they dollarized, that didn't guarantee anything beyond the short term.
Exactly. And it would be the same for Argentina. It doesn't really matter what kind of institutional setup, how you dollarize, you could reverse it. And secondly, this is, I guess more fundamentally, when you reform the monetary system, you must have some ideal you're working towards, right? Philip Barkus wrote a very good paper on this. I don't know how wide known it is. Just called "The Case for Button Pushing," where he says that, well, you need to, when you have a monetary reform, it needs to be ethical, it needs to be just. You cannot expropriate people. It needs to be in conformity with good economic theory, right? You cannot have a monetary reform that's based on the real bills doctrine or other nonsense like this. At least you can try it, but it's going to have very bad results. And the third criterion that he sets out is that, well, you cannot impose or you should not impose an end result on the economy. You should, as far as possible, just lay out the basic rules, and then let people themselves, let the market itself decide what kind of money do we want. If you dollarize, you are just imposing the end result. You're saying that, well, Argentinians should use the dollar. They are not allowed to choose for themselves. I mean, it's possible that if you just leave it to people themselves in Argentina, they would spontaneously dollarize. They already own huge amounts of dollars. If you save in Argentina, at least so I understand, to a large extent, you just pile up dollar bills in your home. So that's not out of the question that this would happen automatically or spontaneously. I think, but nevertheless, we cannot really know this a priori, right? We'll need to let the Argentinians themselves decide, let the market itself decide. Only then can you actually say that, yeah, this is an ethically defensible monetary system. It's a economically sound monetary system, and it's one that's enduring and really in conformity with what people really want. So instead, I mean, what I would say is that a monetary reform is potentially very simple. You could just say, well, close the central bank, allow free competition in currencies. Milei has talked about this, at least before he became president, that he wants free competition in currencies. I don't know how much he really talks about that anymore. It hasn't happened yet. And that too is not really something that you don't really need any kind of advanced legislation or central bank institutions or whatever. You just say that, well, people can do whatever they want. They can sign whatever contract they want, and the government is not going to override this and say, no, you have to pay in pesos, you have to pay in dollars. And the government then has to accept tax payments in whatever currency people prefer to pay in at the market exchange rate. And if you do this, Then, as I said, one possible outcome is dollarization. One possible outcome is that people continue using the peso, especially now if there's no longer any central bank in this scenario. So there's a frozen supply of pesos. Or they might switch to another currency. You can make arguments for why that would be likely, like a commodity money is always has an alternative use, right? So there's not really any with a paper money, even in the case of a frozen supply, the only use you have for it is for as money, as a medium of exchange, for making purchases. So if for some reason people decide that, well, we don't really want to use the peso anymore, we're going to dump it and change to something else, well, then the peso is going to lose all its value, or the dollar is going to lose all its value. And in the case of a commodity money like gold or silver, this would not happen, because if you don't want to use it for monetary purposes, well, you can sell it for industrial use or for jewelry or whatever. So we can speculate that spontaneously the market would provide a commodity money, even in a smallish country like Argentina. We can't really know that a priori, and arguably we shouldn't try to impose our preferred monetary system on it, on the country. I would speculate myself that the peso could remain in existence. The Argentinians could dollarize spontaneously, or we could switch to gold or silver. I can't really, or maybe Bitcoin also. I can't really give any like result what would happen or what should happen. But I think it's obvious that if you go down this route of a free market monetary reform, of like or libertarian monetary reform, if you will, this would certainly be optimal. It would also, this is one argument that you could make against it, that, well, you might have bank runs, right? You no longer have a central bank, you no longer have a lender of last resort, so maybe the private banking system would collapse. That's a different argument. I don't know if we want to get into that today to discuss the pros and cons of that, but that's certainly also something you have to get around. That's not really as bad as people tend to think it is.
Well, since you've practically forced me to ask you this question then, so how do you move beyond the potential issue of a bank run? Because you don't have the lender of last resort. You could technically have a situation where the central bank's abilities are reduced to nothing other than lender of last resort, right? It has no ability to purchase any assets or anything like that. We've talked about that here, right? The very first thing you need to do with the Central Bank of the United States is prohibit it from making any more asset purchases, because that's so central to its inflationary behavior. But let's say the central bank is gone completely. Yeah, how do we explain away? How do we address the argument about bank runs?
I think first of all, if you have a fractional reserve banking system, and if there is no central bank, then the bank runs are going to happen. You are going to see a purge of the system. Free bankers would deny this, but I don't really think that a fractional reserve banking system is sustainable. So it is. You're right. It is something we need to address. One possibility that might really be the easiest is to say that, well, the last act of a central bank before we close it is that it prints up peso notes to the extent of fiduciary media in existence. So we just turn the banking system into a fully backed banking system before closing the central bank. And that would avoid this problem. That would at least appear to be the smoothest way to do it, right? I think it's not really necessary. You could close the bank, allow the bank runs to happen. Now, what would happen is, of course, a further, not only a freezing of the money supply, but a drastic reduction in the money supply. So you would also see, all other things equal, an increase in the value of money. And money would then only be peso notes to begin with, right? And then, as I said, we don't know what will be the outcome of the competitive process. And whatever liabilities are fully backed by peso notes. The people with deposits in the banks, well, they're going to suffer a credit crunch. That's to say, their deposits, what they thought was their cash balance, was their own personal stock of money, turns out to not be a stock of money, or maybe only 10% of it is a stock of money. It doesn't mean that they lose their entire capital. It just means that the bank goes bankrupt and the depositors become the creditors of the bank, and bank assets then have to be sold off and proceeds distributed pro rata to the depositors and to whatever other creditors there might be. So, arguably, in the medium run, once this liquidation process is through, then people would arguably have more or less the same amount of savings of capital on hand, but no longer in the form of money. So the real issue is this short-run credit crunch or short-run collapse in the money supply when you have these bank runs. That what will happen then is that people see, well, prices will need to adjust, right? People will say, well, I thought I had whatever 10 million pesos in my bank account. It turns out I only really have 100,000 on hand. So monetary demand for all kinds of goods will collapse by this amount, and supply will have to. The prices will then have to adjust. This is short-term painful, doesn't really long-term amount to much. That's to say, you may have some short-term redistribution of wealth depending on, well, to what extent people had their wealth in terms of bank deposits, in terms of peso notes, or in terms of dollar notes. You may in Argentina in case see that as these bank runs happen, people then just to a greater extent shift to dollars because there's simply more dollars in existence than pesos. For the wider economy, it doesn't really doesn't lead to long-term disequilibrium or long-term unemployment or anything like this. If you see unemployment emerging, that's because there's some kind of minimum wage regulations, or if you see shortages of other goods and services, it's because there's some kind of price controls in place. It has fundamentally really got nothing to do with some sort of monetary disequilibrium or sticky prices or whatever the various arguments advanced by various monetary theorists. That's really, there's fundamentally no reason to fear this kind of bank credit deflation, of bank collapse.
Well, it just seems to come back to so often what we've talked about here at Radio Rothbard, which is just allowing the market to determine what the money would be, right? Because we get so many people say, oh, everyone should get Bitcoin, everyone should get gold. And we're like, whatever the market decides is the best money is the best money. And that just seems to be the same thing here. Right? It's not dependent upon whatever the central bank owns. It's just dependent on what the market demands in terms of what serves as the best medium of exchange. And that's why right? That's why we bring it up here now, because these are basically universal issues, right? Milei chose to turn the debate into a debate over economic policy, which applies everywhere, not over simply pragmatic issues in Argentina. So everything we're talking about here applies to any other central bank, it would seem, in terms of getting rid of the central bank is the value of your local currency based on whatever assets your central bank owns and so on. And I think we're showing that, no, it doesn't depend on that sort of thing. So thank you for joining us today, Kristoffer. I think this was very helpful. It's so good to it's so important to reiterate some of just these basic truths about money and what it is and how it's not debt. It's an object that people value and which has a certain supply and a certain amount of demand, and that is essentially what determines its value. And I think that's just something we need to keep in mind when we're talking about any of this sort of central bank debate stuff. So thank you very much, and thank you everyone out there for listening to this episode of Radio Rothbard. We will be back next week with more, so we'll see you next time. One last thing, Radio Rothbard fans. Before you go, I want to make sure you know about our April 26 event in Phoenix, Arizona. And this one's called Our Enemy, the Bureaucracy. This one features Dr. Robert Malone, Tom Woods, and Tom DiLorenzo as they discuss the psychological operations and bureaucratic control, the madness of COVID-era public health, and the corruption and hypocrisy of our federal bureaucracy. Tickets are $100 for Mises members and $120 for non-members. You can register now at Mises.org/Phoenix25, and you have a chance to win a free ticket to the event if you enter the raffle at Mises.org/PhoenixRaffle25 by April 1st.